I saw some performance in funds like consumer staples and utilities this morning. And, Santa Claus came to town a couple hours ago with some of the, slightly more dovish talk. And now we're seeing a rally in some of our bull tech ETFs, and, some of the growth sectors, again, are taking off after some of these announcements. So I think that, the information that Jay Powell came out with that seemed to suggest that we're closer to neutral really helped buoy the markets up. It's one less bit of uncertainty that traders are looking for.
All right, so Steve, does that kind of echo with what you were seeing on your end of things? Are we in fact poised to resume what is seasonably a strong time for the equity markets? It sure didn't feel that way over the course of the last 6 to 8 weeks.
Well, this has been bubbling up for the last few days. There were a couple of articles in the Wall Street Journal earlier this week talking about how the Fed might be changing course. There were comments from James Bullard, St. Louis Fed, yesterday or the day before, once again echoing this sort of, well, maybe we're not going to continue this pace much further. They've got a bit of a problem. The Bank of Japan is still pedal to the metal. The ECB is still pedal to the metal. So, you've got interest rates in a fraction of a percent elsewhere in the world. You've got central banks that have significantly larger balance sheets than the Fed, who are still very, very aggressive. And by their own hand, is the Fed going to invert the yield curve? You've got the 10-year at 3, or a little over 3, because there's rampant buying from people who live in a world where their interest rates are 0.3 or 0.2%. 3% is a very good rate if you live in that world. I just don't see the Fed actually inverting the yield curve on their own and creating a problem that way. So this, to me, is something that's been in the works for a while. And yes, it's good news. And yes, it probably leads to some kind of Santa Claus rally.
So Sylvia, the Fed chair is a subtle and smart man. He clearly was signaling something today. Maybe he didn't intend to signal the stock market to go up 600 points or thereabouts. But if there is a signal this weekend that comes out of the Xi at Trump dinner, what would you expect the market to do, and for how long?
Well, so I think, the two major forces that have been sort of pulling the market back and instilling fear in investors and giving us some risk-off sentiment this month have really been the Fed, and the second thing has been trade wars and trade tariffs. So I would expect that if we get positive news from President Xi and President Trump coming to some sort of conclusion, it ends up being good for both China and for the U.S. And I think the market continues to rally into year end. And then I think we go back to, slightly slower growth into next year, but positive earnings, maybe high single digit growth in equities versus, a potential faster paced pullback or recession if we get bad news and increased tariffs on the 200 million and then perhaps additional tariffs passed at the end of the year. I do think that would set the markets back.